Good afternoon, my name is Olivia Nuttall and I'm a Senior Business Analyst. I was recently approached by some shareholders who were concerned about the risk of their investments in Nova. In response, I have put together this presentation for you to advise you on the state of affairs at Nova so that you can recommend an appropriate course of action to Nova's senior management team. The aim of this is to minimize controversies and avoid negative consequences. I'll be covering the following key issues in this presentation, which are related to industry, contracting, auditing, accounting, and corporate governance. To give a brief overview of the company, Nova is a computer manufacturer which has recently found themselves struggling to keep up with rapid changes in technology. This has caused their major product lines to turn obsolete, and as a result, they have landed themselves in a bit of a financial crisis. I understand that Nova's senior management team and engagement partner Mark Adams have used unethical practices to keep the company's finances afloat. This has caused tension with stakeholders such as Audit International. From the analysis of the above issues, it is hoped that major shareholders will advise senior management at Nova on my recommended course of action to minimize controversies between Nova and their stakeholders and to avoid Nova from facing future negative consequences such as bankruptcy. The agenda for the following presentation is as follows. I will first cover the issues outlined in the discussion section in order of industry, contracting, auditing, accounting, and corporate governance. I'll then summarize my points on the following issues in the conclusion and follow up with recommendations for you to advise Nova's managers. Next, I'm going to be analyzing the industry that Nova operates in. The computer industry is characterized by short product life cycles, intense international competition, and rapid changes in technology. The computer industry is highly consolidated, with top competitors such as Lenovo, HP, Dell, and Apple. From research, I can see that demand for portable devices such as tablets, mobiles, and laptops has significantly increased, while demand for PCs, which Nova sells, has diminished. To compete in the industry, Nova has employed a differentiation strategy to be in the forefront of technological innovation. They also sell in a niche market for scientific computers, which has proven to be an issue for the company. Nova's N100 computer was designed for the specific purpose of petroleum exploration. However, the petroleum industry has declined due to concerns for sustainability, the digital revolution, and technological advancements. This has effectively rendered Nova's products as obsolete. I will now be covering the contracting issues, which I will describe using agency theory. Nova has an agency relationship with Carson & Associates, where Carson acts as the agent whilst Nova is the principal. Nova established a joint R&D agreement with Carson that states they have a contractual obligation to develop a new computer that would give Nova exclusive rights to manufacture. This would create an intangible asset that Nova reports in other assets in their balance sheet. If Carson does not fulfill their contractual obligation to repay the $900,000 in 10 years, then Nova could exercise their right to acquire Carson. However, this would do Nova no good, as it would create a contingent liability of $200,000, which is a negative net worth for Carson. The other agency relationship Nova has is with the bank. Nova acts as the agent in this relationship, whilst the bank is the principal. Nova entered into a contract with the bank to obtain a $5.8 million loan, which included debt covenants. Debt covenants are not used to place a burden on the borrower, rather they are used to align the interests of the principal and agent. After Nova violated the debt covenants, the loan became immediately due and payable in 2019. However, Nova exercised the right to permit the bank from demanding repayment before the loan's normal maturity date. In response, the bank waived the settlement of the $5.8 million bank loan for 5 months, which gives them time to financially recover. However, this creates problems with loan classification, which I will discuss further later on. Next, I will discuss the auditing issues. Wright's role as the senior auditor is to make sure that information reported on Nova statements complies with GAAP. One of the requirements of an auditor is to form an independent opinion on a company's compliance and present it in the notes of the financial statements. This opinion is important as it can make or break the reliability of the financial statements. However, it appears that Wright's opinion on many matters, such as the reclassification of the bank loan as a current liability, the adequacy of Nova's allowance for doubtful debts, inventory obsoleteness and expensing the advance to Carson as an R&D expense has not been accepted. Adams has a higher ranked position in comparison with his subordinate Wright, which effectively gave him the power to have the final say on all accounting matters. Adams' role as engagement manager is to maintain a positive relationship with Nova. His interest in the company has caused conflict between opinions with Wright, however. It appears Audit International conceded to Nova on many occasions, which creates an issue of justification of the unqualified audit report. The next section, I will be analysing the accounting issues regarding Nova's financial statements. I've analysed the statements and have concerns over the accuracy of their reports and would suggest making some adjustments. Covering the issue of the loan liability, there was some confusion regarding whether the loan liability should be classified as current or non-current. I have to agree with Wright, who stated that the loan did not qualify as a non-current liability. It first provides clarification on this matter, stating that if the borrower has the right to defer settlement for 12 months beyond the settlement date, a loan is classified as non-current. Since Nova only obtained a 5-month waiver, it should classify as a current liability in the 2019 balance sheet. The next issue I want to cover is the materiality of the $400,000 research costs. Adams chose to omit these costs because he felt it was an immaterial cost, but failed to consult with his subordinate Wright before doing so. IASB states that auditors need to assess the size, nature, and impact the item will have on the financial statements. The accounting industry developed their own benchmarks and stated that amounts below 5% are generally considered immaterial. Since Nova's research costs are 45% of the $900,000 advancement, in this case, they should be classified in the income statements as a research cost of $400,000 and will have significant impact on the profit figure. I should also briefly cover the inventory write-down issue. Nova resisted to write down the inventory of N100s even though they were significantly overvalued. From investigation, I can see that Nova has not complied with GAAP, as it requires that a write-down of inventory should occur if the market value of inventory falls below cost. I can see that Nova have reported their lower of cost amount at the net book value of $2 million instead of its market value of $500,000. GAAP also requires that obsolete inventory should be written off and expensed in the current period, which means the remaining $1 million of obsolete N100s should have been expensed in Nova's 2019 income statement. Investigating the issue of asset and process amount, firstly, it is unclear what year the computer equipment was actually placed in service, whether it be 2015 or 2017. I will discuss this more later on. Secondly, with no clear date, Nova cannot accurately record the depreciation for the asset. If Nova placed the computer equipment into service in 2015, the asset would be fully depreciated by now and recorded in the balance sheet against the cost of the asset at $435,000. This means that no depreciation expense would be recorded for 2019 in the income statement. However, if the asset was put into service in 2017, then Nova should be paying depreciation of $87,000 each year until 2021. Nova has opted to prepare according to the 2017 date. Regardless of whether this is correct or not, it's favourable for Nova to do as it spreads the cost of depreciation and increases the value of computer equipment in the balance sheet. Now touching on the issue of the reserve for doubtful debts, two of Nova's largest receivables have been outstanding for 4 years. Nova has not previously reported amounts for bad or doubtful debts on their financial statements, therefore we cannot rely on past data. Instead, I've used the aging of receivables method to roughly calculate an appropriate increase in allowance for doubtful debts. Since the $162,000 of outstanding debts is around 21% of the total accounts receivable for 2019, this would result in an arbitrary increase of $141,330 to the allowance for doubtful debts. This should be adjusted accordingly. To conclude this section, I'd like to comment on the general operational performance of Nova. From examining their statements, I noticed that Nova's cash flow for operating activities has decreased significantly over the last 3 years by $7,495. This shows significant strains on cash being generated through business operations. I observed Nova is increasingly reliant on debt financing, as the $5,963 increase in loan payable and the $3,215 increase in accounts payable for 2019 indicates they are reliant on banks and creditors. This could explain Nova's poor operating results for 2019. Regarding issues around corporate governance, I firstly want to discuss Nova's management integrity. Nova's CFO demonstrated he has high discretion for his position, and he's managed to delete all references in connection with Carson as a joint research and development agreement. Manipulation of financial statements signals to me a lack of management integrity. The CFO has acted in self-interest to protect his position and the company instead of considering your best interests. A related issue I want to cover is Nova's lack of internal controls. Nova could provide no invoices or documentation to support the value of computer equipment placed in service in 2015, supposedly. This indicates to me that the company has weak internal controls, as they do not have a sufficient asset management system to keep track of the important details of their assets. Finally, the last issue I feel should be covered is the need for an independent third-party opinion. Nova's senior management team disagreed with Adams and Wright's decision to increase the allowance for doubtful debts and instead referred them to the company lawyers to come to an agreement. However, the issue with Nova's lawyers is that they have the company's best interests in mind and they are not qualified to give advice on accounting matters. In conclusion, I have addressed the state of affairs at Nova and issues that could impact the risk of your investments. These include issues related to industry such as technological advancements resulting in high R&D expenses and inventory obsoleteness, as well as contracting issues such as the implication of Nova advancing the $900,000 loan to Carson and the consequences of Nova violating debt covenants in their contract with the bank. The auditing issues that were covered include the role of the auditor and the conflict of opinions between Adams and his subordinate Paul, resulting in lack of use of professional judgment to issue unqualified auditor's opinion. Next, we covered several accounting issues relating to reclassification of loan, materiality of research costs, inventory write-down and write-off, depreciation for assets, accounts receivable, allowance for doubtful debts, and general operating constraints. The corporate governance issues that were covered include lack of management integrity, manipulation of financial statements, lack of internal controls, insufficient documentation, and issues with obtaining a lawyer's opinion for accounting matters. I will now follow up with several recommendations that you can use to advise managers at Nova. I will further discuss these now. The first recommendation is for Nova to use a market survey tool or focus group to collect data on technological trends and customer demand. This would create a competitive advantage for Nova, as it will give them a clearer idea of what customers want and minimize R&D costs so they don't have to go back to the drawing board as much. A recommendation that I would make in regards to Nova's financing issues is that they contract a debt reconstructing firm. Debt reconstructing firms would negotiate with Nova's creditors and business debt collection agencies on their behalf to formally extend, renew, or change existing credit agreements. This would help Nova significantly reduce their debt financing and contracting issues. Another recommendation I have for Nova is to establish an audit committee. They will monitor the audit quality and mitigate conflicts of self-interest among managers. This will ensure Audit International's opinion is accurately reflected in the unqualified audit opinion. The next recommendation I would make in regards to accounting is to improve accounts receivable collection in order to prevent an increase in allowance for doubtful debts. This could be done through offering a payment plan or discount to those customers that pay early. I would also suggest that you advise Nova's accountant to systematically enter the adjustments I've outlined into their accounting database and issue a new set of statements that accurately reflect the financial results of Nova and can provide comparability going forward. Finally, I would recommend Nova's audit committee to put in place corporate governance policies and a detection program to prevent management manipulating financial statements in the future. I would also suggest that Nova should invest in an asset management system such as Xero to keep track of assets and to provide sufficient accounting evidence. It is also crucial that Nova seek an independent opinion from a third party, such as a qualified auditor or accountant, to avoid misinformation and bias, which will ensure the financial statements convey true and fair information. Thank you for listening to my presentation. I hope you found some clarity and can now provide appropriate recommendations to Nova's management.